Hey everybody, hope you're all well. It's Friday the 8th of May 2020 and I'm coming to you from sunny Mauritius in the middle of the Indian Ocean, a small tropical island with only about 1.2, 1.3 million people on it. Yes, just like everywhere else, we're in complete lockdown. We have 22 days left to go. We theoretically will be returning to normal life on the 1st of June 2020. So as I've said in previous episodes, I started this video podcast. I used to have just a normal podcast, just recording interviews with people. Now I'm adding visuals, and by visuals I mean I'm sharing a screen and sharing my ideas and charts and going through some news stories and some tools and a little bit of analysis on Bitcoin and the greater cryptocurrency market. We are EGIL.TRADE. We have an EGIL.TRADE Discord as a group of like-minded people who are in there. It's still fairly new. We want to grow the community. It's absolutely for free. You do not have to pay to get to be inside the community. Please see it in the description below. Join it. If you enjoy this show, please give us a like. Leave us a comment. Let us know what you think. If there's anything you want us to add, change, or anything constructive that you can think of, we're happy to listen. Give us a subscribe so that you know when we're going to go live. If you click the little bell button, you'll get notified automatically when a show gets released. And we are going to be adding some live streams, so you'll get notifications on those too. So yeah, share it and get it out there, and let's try and grow something here. We are sponsored by CryptoFish.com, which is a company that I'm actually part of. It's a really easy to use, quick platform to get your hands onto Bitcoin. In most parts of the world, you can use a debit card and credit card. It's instant, it's non-custodial, so your coins are delivered straight to your wallet immediately where they belong. It's not held on a platform on third-party exchanges or anything like that. Right? You can use debit card, credit card, ACH in the US, SEPA in Europe, and you can use UK foster payments in the UK, of course. Soon we'll be adding US Wire. We're going to be adding Poly in Australia and some other payment methods. And in the Netherlands, we'll be adding Ideal payments. And there's a few other countries that will be adding along the list. We're very close to adding these things. I would say within the next week or two, these things will go live, and we'll be very proud to let you know. And yeah, that's about it. As long as we can get Bitcoin into people's hands, we're happy. We've also got an absolutely for free learning section: Bitcoin, crypto, blockchain, and Bitcoin, crypto, blockchain 101, Cryptopedia, which is basically a glossary of terms used in the space, an absolutely free video learning portal. Plus, we've got our crypto podcast. Okay, moving on. Look at this beautiful sea of green behind me. It is absolutely stunning. It's always good to see a sea of green. Bitcoin up 6.6% or 6.84% at time of recording this right now. Ethereum up 2.84%, and most of the other stuff is up over 24 hours. And it's always great to wake up and see that. Of course, Bitcoin dominance has ticked up at 68.53%. That probably will be ticking higher as time goes by, as we head closer to the halving. Talking about the halving, ladies and gentlemen, we are 3 days, 13 hours, 53 minutes, and 55 seconds away from the halving. 12.5 Bitcoins down to 6.25 Bitcoins will be released every 10 minutes, decreasing the inflation rate. Why is that important? Well, Bitcoin's got a predictable money supply. It's only 21 million Bitcoins in circulation, and the emission rate changes every 4 years, or I think it is approximately every 2,000 or 210,000 blocks. Yes, there it is there. You've got all the stats on this page. It's bitcoinblockhalf.com. You get all the information you need. Over here, you've got really good stats. Like right now, there's only 18,368,550 Bitcoins in circulation. That means the rest of the world, if you don't own a Bitcoin, you guys are going to have to fight over 2.631 million Bitcoins. How many billions of people are there in the world? And we've only got 2.6 million Bitcoins left to be mined. Kind of makes you think. Inflation rate, you can see it over here, is right now 3.64%. It's going to be dropping down to 1.8%. Very close to gold. I think gold is 1.5, 1.6%. I keep saying that, but I must actually go and check. I must actually verify that. But I do believe it's somewhere in that region. And why is that important? Well, the stock to flow ratio affects the value of the asset. In other words, the existing stock, That would be the amount of Bitcoins in circulation, and the flow will be the emission of new supply onto the current stock. Check it out. Google it. There's great articles on the stock to flow ratio, and now there's the stock to flow S2FX, which Plan B has released. Check it out on Twitter. Also, while you're at it, read the book called The Bitcoin Standard by Saifedean Ammous. Absolutely outstanding, and I would take it even a step further. He's got these cool courses to do with Austrian economics. Absolutely outstanding. I've done the first course, Econ. I think it's called Econ 1.1. I think, if I'm not mistaken. Absolutely outstanding. Great content, and I tell you what, I learned more from that than I can imagine I would ever learn from sitting in some class learning about legacy traditional markets. Okay, guys, I don't want to keep you any longer on this. Let's have a look at what was in the news in the last 24 hours. And everybody is talking about this, so I may as well mention it too, because I do think it is substantial. Being somebody who does trade and somebody who has read up and knows a lot about Paul Tudor Jones, it is, to me, very significant that this guy, who's a well-known trader and has huge funds, has started buying Bitcoin. And our quote here, he says, the best profit maximizing strategy is to own the fastest horse. If I'm forced to forecast my bet, it will be Bitcoin. That is outstanding. So apparently his one of his BVI funds will start holding a low single-digit percentage of its fund in Bitcoin futures. That is significant. That is absolutely significant. Only bullish for Bitcoin. Combine that with the money printing that's going on around the world, plus the limited supply of Bitcoin, plus the decreasing emission rate or decreasing inflation rate of Bitcoin, and the hash rate is gunning again for all-time highs. You couldn't ask for a more bullish market. Now, that doesn't mean we're not going to have pullbacks. It just means things are looking good. Right, moving on. Here's the S2FX Phase 5 estimations. This is based on Plan B's article. So in this article here, you can look it up. I'll try and put a link in the description below to this article. And in this article, you can get links to Plan B's articles. Right here, if you look at the stock to flow models that this guy's talking about, so in phase 1, 2, 3, and 4, because that's the S2FX model comparing to gold, silver, and gold. I think what this guy is basically approximating here is that the fifth phase, the phase that we will be entering into, and here it is over here, because S2FX by Plan B only went 1, 2, 3, 4 phases, silver, gold, but this guy is adding a fifth phase, right? And in the fifth phase, he's estimating between 1.6 trillion and 29.1 trillion at the end of the phase evaluation. This translates to an individual price. I can't talk properly today. An individual Bitcoin price of between $83,000 and $1.48 million per Bitcoin. And if you took a center point around that, it would be $350,000 a Bitcoin. I like it. I'm going to blindly follow it. No, I'm not. Only joking. It's great. It's mental gymnastics and it's fun. So yes, go read it. I'll put a link to this article in the description below, and then in there you can go backwards and see Plan B's articles if you haven't already. They're quite famous. I'm pretty sure that most people have seen them by now. Right, let's have a look at the Fear and Greed Index. Haha, we've swung into the greed zone. Finally above 50. We've spent a long time in extreme fear. You can't see it over here, but if I scroll down, this extreme fear lasted from roughly mid-March all the way to, basically the 8th or the 9th. No, let's just say, sorry, we haven't even got there. So about the 6th, 7th of May. And has been creeping up. So fear, neutral, we're in greed. Finally, we're in greed. So what is the relevancy of this? Well, when this thing ticks to extreme reads, if it's extremely fearful, you kind of expect a counter move, and if it's extremely greedy or exuberant, then you can kind of expect a counter move. It's not cast in stone. It's just something that you can add to the other indicators and other things that you watch, whether fundamental or technical, that you can gauge market sentiment with. Okay, and right now that it's at 55, the way I read this is I say, okay, look, The sentiment is improving. It's more neutral than anything else, but slightly positive. That to me, that says that we haven't got that blow off top, that where people are just buying blindly and think it's just going to keep going up. Therefore, in my opinion, and this is not trading advice, not investment advice, and you should never trade or take any investment based on anything I say here. It's only educational purposes or maybe entertainment purposes. Therefore, I think that we've still got a little bit higher to go before we have a pullback of sort. I don't know how much higher, but I will have a look at the charts shortly. Right, let's have a look. In fact, let's just jump into the charts right now. As usual, guys, I start on the monthly chart. I haven't been changing these horizontals purposely because it's on the macro time scale. And although price is moving up beautifully, look at this monthly chart. The monthly candle now is sitting well above the previous monthly swing high, which was over here. And that was sitting at a figure of, on a closing basis of 9,327. Right now, the price is sitting at 9,960. Overnight, we did hit about 10,050 or 10,080, adjust for your exchange. And I did close the trade at 10,010, I think, because I had to go to sleep. Very small trade. Nothing significant, because I am anticipating that maybe we'll have another little stab up. But I do think that if we break above, if we close, and let me talk about this on the weekly rather, but if we close a weekly above the previous weekly swing high of round about 10,500, I'm just using round numbers here, it could be 10,300, 400, but roughly that area there, when we look at it on the weekly basis, if we close, my internet is going grotesquely slow, if we close above this swing high here, on a weekly basis, which we are very close to. We have hit the liquid zone here that I had marked out. Again, that's why I've left these macro areas out. I'm not going to chart the lower time frames, guys. This thing's kind of trending right now. If it was ranging, yes, then maybe I would break it down into a 4-hour time frame and start plotting out a range that we could trade support and resistance off. But right now, I'm more concerned, since we are hitting these big macro areas and charting the higher time frames. We are hitting that right now. If we close this above, what do we have a closure on here? Okay, 10,170. But I think that even if we tick above this, I think that we're going to see more continuation, and we're probably going to challenge a lot higher. How much higher? Well, as you remember from my previous recording, I hope it's still here. No, it's not. Anyway, from my previous recording, oh, it is, yeah, there it is. From my previous recording, I had this marked out at 11.5 to about, I would even say up to 12,000, give or take. And how I got that was obviously using these swing highs over here, well, this double top over here, which we had in 2019, combined with over here back in March 2018. I mean, if you look at that acted as resistance and sent the whole 2018 down to 3,500 odd, right? And again, the whole of 2019 marched all the way up to that point and again was sent back down to 3,600. So it is a huge area of significance. If we start to close candles above that area, I honestly do think that we are going to challenge the 2017 highs. And if my computer would catch up with me, that would be great. I really need to get a faster computer now that I'm doing this type of recording. But unfortunately in my country, all the shops are closed. When they say lockdown, they actually mean lockdown. So there's nothing I can do right now. Anyway, I do believe that we would be challenging the 18 to 20,000 or 19,000, $19,500 dollar area if we manage to close above the 11.5 area. But first things first, we need to close candles on the higher time frame. Let's say a weekly, but I'd say even if we start closing, maybe even on a 2-day, 3-day. Above this swing, this area over here, then I think we're going to challenge the 11.5 area. There's a lot of exuberance in the market, and I've heard from a lot of retail platforms that there's been record signups and record record purchases, a triple-digit percentage growth in retail sales. And when I say record, I mean, it's starting to look very similar to 2017. I'm not saying that we're going to break all-time highs or anything, but things are looking quite positive. And when we look at the charts, there is a little bit of confluence here. Let's break it down to the 2-day chart. So we did get that golden cross that we spoke about. Of course, remember we had the death cross that we lived under. We got a bit of divergence. Didn't really get played out. We grinded against the 55, grinded against the 200, blasted straight through the 200 EMA, straight through the 200 SMA, grinded the area of resistance here. Price leaked up. We turned the chart to the inverse, and you could see it just looked like it was drooping over, rolling, and about to go. And I think we said that yesterday, and boom, we got the move that we were looking for there. Let's turn the chart back the right way around, and let's go back down to the 12-hour. Oh, before I mention that, there's the golden cross there. So the death cross has been undone. Historically speaking, we do generally get very, very good moves off the golden cross, death crosses on a 2-day. The 2-day Stokes are looking a bit tired up here, to be fair, but they can stay up there for a while, so I'm not too concerned about that. What I do like is that the 2-day RSI is now in the bullish control zone. Let's go down to the 12-hour. I'm actually going to skip out the daily today because I find that I get a better read off the 12-hour. We are still living healthily above the golden cross, getting massive divergence now, and I think this is the play that we're getting. I do expect a bit of a pullback at some stage, but I'd like to pick up longs again, anywhere from about 9.5. We have got this zone over here. If we wicked into this box to test previous resistance as support, I would like to pick up some longs here again, just for a trade back up. And I do believe that we would probably take a stab at the 10.5 area at that stage. I am a little bit reserved as to whether we just go straight up from here. I don't know. Of course I don't know. Nobody knows. But I do think that we could grind this area out a bit, maybe perhaps reaccumulate a little bit lower, then take a stab up. We have hit the 10,000 area, and just from previous experience, when we've broken major levels like that, especially at like 10K is a huge psychological number. When the wick does run above it, I just find that then it runs up multiple hundreds of dollars if we're going to keep going in that direction in that instance. And we didn't really see that. It was an absolutely amazing 2-day candle close, as well as a 12-hour and a daily. So I'm not saying that we can't keep going and get continuation straight off the next candle from here, but I would anticipate that this 12-hour, which closes in about an hour's time, closes in a similar position to this, and within the next candle, perhaps we see a continuation and challenging the 10.5 area. I'll be watching carefully on that. However, it won't be the end of the world if we do reaccumulate somewhere above 9.5. I'd say 9.5 to 9.6. We've already come down to 9.725. Was that the drop? Is that as far as we're going to go? Is that how bullish things are? Perhaps, I don't know, but things are looking pretty good here. I won't go into a lower time frame than that. As I said, I'm just watching the high level time frames for now. I do like what I see, and I've got no reason to be bearish on this. Not on the medium, or long term. I mean, we're in an uptrend on just about every time frame here. 1 day uptrend, 12-hour uptrend, 2-day uptrend. Yes, we still got the swing high here, but from this area here going up, we're in an uptrend. 3-day uptrend, and weekly, yeah, because it's sort of got more macro swing highs. We're forming a new high. Okay. We could form a new high. We haven't yet. So technically speaking, we're not in an uptrend. We're in the first leg of an uptrend. But it can only be confirmed uptrend once we've got a higher low after getting a higher high. So, I think that's why there's a lot of eyes on this region, besides the fact that it's been used as support and resistance on this scale a lot. But, it will be very significant if we close again like we did there, but that was a bit of a bull trap swing pattern failure. But this time, if we close above here, I think we won't just stop here. We will likely get continuation. That's my opinion. We'll likely, if we manage to close above this area, we'll likely get continuation. And of course, at some stage, and we won't know exactly when, but we'll take it as it comes. There will be a lower high that's set in, and then I would say that whatever that area is, hopefully not too low, or actually, as long as it doesn't break the structure, that would be, I think, an absolutely great long-term buy. Not so much a trade in terms of a day trade, depending on your style and that, but I would say it would be a good spot long buy to hold on to, because perhaps at that stage we're gonna build out a new bull trend. But we'll take it as it comes, because like what happened here, we got a higher high on the weekly. We never got the higher low. And there's nothing that guarantees us there's nothing that doesn't stop that from happening again. So as much as I'm bullish and positive about things, we'll take it as it comes. This is just merely areas of interest where we can manage risk around, our management risk around, and I base my decisions on. Okay, guys, I hope you've enjoyed today's show. Happy trading. Good luck out there. Remember, this is not investment advice, purely entertainment, educational purposes. Everybody's got their own style. Everybody's got their own way of doing things. This is the way I do it. I've learned from a few people along the way. I've taken the good and I've left out the bad. What, in my opinion, what I don't enjoy. Everybody uses different indicators. Everybody's got different styles and techniques. Whatever works for you works for you. This works for me. Have a great Friday and a great weekend, and watch out for the CME close today. It might give us clues as to what will be happening on Sunday for spot and future exchanges.